Hello, and welcome back to the Blue Collar Dollar, the home of average investors seeking above average returns. I'm your host, Tyler, and today I will be touching on probably hands down the most important thing you need to know before you ever start investing or trading anywhere, crypto, stocks, options, whatever, and that is risk management and identifying risk and reward. So let's dive right into this. I'll pull up Tesla. And you can see that today Tesla is trading for about $990. If you were to buy this right now for $990, your maximum risk is going to be the price you paid for the share. So it's going to be $990 max risk because stocks can go to zero. If I give you $990 and you give me zero back, I lost $990. Your maximum reward will be infinite because stocks have unlimited upside potential. So what we're going to do here is we're going to go buy one, market, good for day. And what these actions mean, buy, we're going to open a long position, sell, we're going to close a long position or open a short position, and buy to cover is what you need to utilize to close a short position. If you use buy to try and close a short position, you will end up with a long position and a short position. You won't close your short position by buying a stock. You need to buy to cover. And duration, we have, good for day. That's a market price. If we go to limit, we can go for good for 60 days, good until canceled, immediate or cancel, fill or kill, which these are kind of similar. Extended hours, so this is outside of regular trading hours. And then this is an extended hours, immediate or cancel. The other types of price type you have are stop on quote, stop limit on quote, trailing stop dollars, and trailing stop percentages. So if we go to stop limit on quote, this is going to be, some people use just stop on quote, some people just use stop limit, and that adds in, a couple various steps in here. It depends on which broker you have, which availabilities will be open for you. So let's say I have one share that I paid $990 for, and it's sitting in my account. I don't want to lose more than $100 on it, right? So what I'm going to do is I'm going to change this. Since I already have one now, I'm going to sell that share on a stop limit on quote. And if this breaks down into, $900, this will activate the stop. And what that means is after the stop is activated, your limit price is going to try and fill for the price that you want. So if I set this at $900, right, and it's on the way down, and I try and set this for $950, it's probably not going to fill. Because when this activates, this stop price, when this is hit, which means the price moves through it, the limit price, this order goes active. And if this 950 is higher than this, it's going to need to come down to 90 and 900 and back up to 950 in order to fill. So I usually set a limit price below the stop price here. So we'll call this 890, right? So now what I've done is if I place this order, I'm not going to place this because I don't want to short this. If this stock starts dropping and I only want to lose $100, it's going to sell it for me at $890. And now my maximum loss has gone from 100% or $990. We're down $100. Let's say that's 10% about. Now I only have a 10% risk because it's going to sell it for me here. The stock market is one of the only places that you can set how much you want to lose. If you buy a house for $300,000 and the market says it's only worth $100,000, you can't really stop out at, if it goes below, $150,000, I want to sell it. No. Stocks, people that lose all their money in the stock market do not use risk management and they do not use stop losses. Another option, if you don't want to deal with limit price, stop price, you can just come in here to stop on quote, to call it 950. If the price drops below 950, this will activate and it will try and get me the best price down around here. So if it's $9.50 and $9.86 is what I paid, my maximum risk here would be about $35, $36. All right. Now, how do I tie this in, what we learned about support and resistance levels, with becoming a more accurate and a more successful trader? So we'll jump back over here to TrendSpider. Now I'm going to show you how you can use support and resistance levels along with stop losses to identify potentially quality trade setups. So if I didn't look at the chart and I bought it at, whatever, up here at 29.30, and I put a stop loss at 28, the chart is just trucking through. I didn't place my stop loss on support. I didn't really have a price target. So you're just shooting in the dark. You're basically gambling. Before you enter into a position, you should identify your exit, you should define your risk, and you should define your reward. So if we look down here, this is the VIX, or the Options Volatility Index. We can see that the price is bouncing off of this 100-day moving average pretty decent. So we'll put a stop loss right there. And the current price is right here for our entry. We're not forcing these, we're not pulling them out of the air. We're looking at the chart and we're just kind of identifying them and plotting them. And we'll say that the next resistance is about right here, right underneath this 200-day. So we have our entry, we have our exit or stop loss, and we have our exit or profit take. This area above your entry represents the reward, and this area beneath represents your risk. You want to try and find trade setups that have at least a 2-to-1 risk to reward setup. This way, if you're wrong, you only have to be right half the time in order to break even. The higher risk reward setups you can find, the more likely you are going to be successful. If you're only risking $1 to make $5, you've only got to be right, 20% of the time in order to make money or break even. So I'll kind of walk you through how this works. I've created an Excel sheet. It's a calculator. It helps you calculate your trades. You can input some of your own trading variables for how much you want your stop loss to be as a percentage of your initial price, how much you want your reward to be in relation to your risk unit. So I'll go ahead and pull that up. So here we have this calculator, and I'll post the link to that down in the comments section. And we'll type in the symbol for the VIX. Next, I'm going to type in my entry. And my entry is 21.30. My stop loss, well, I'm sorry, my entry is 21.92 and my stop loss is 20.30. Now my total risk per share here is 62 cents per share. I have defined my risk per share. How much do I want to risk? Let's say I only want to risk $20 on this trade. Now it's going to tell me if you only want to risk $20 and you're losing 62 cents per share if you take this trade and it goes against you, you need to purchase 32 shares, and your your purchase price is $707. Let's put in this last variable and clean this up. Next resistance support level, 23.50. Alright, you'll see that some of these things calculated, and it now tells you your max profit of $50 for a risk of $20. So if you take 2 times 2, you're going to get 4. So is this max profit greater than, twice the risk? Yes. So if I risk $20 and lose, I'm down $20. If I risk $20 and I hit it, I'm up 30 now. So I'm only right half the time here. So I'll get into how these now numbers are kind of calculated. So this box is the stop loss okay. is calculated as, is the risk per share greater than 3.5%? This goes back into proper risk management. If I only want to lose 10% on a position, I can move this to 10%. If I only want to lose 5%, I can move this to 5. This ties back into, people that are down 60% on a stock. Like, you don't need to be there. You don't need to be in that dark place. You can set this to 3.5%. All right. And now this says, is my stop loss, or risk per share within 3.5% of my initial price? So if I take 21.92 and 0.035, does this equal this times that? So 76 cents would be the maximum amount that my stop loss should be below my entry in order to stay within my parameter of only wanting to risk 3.5% of my position. I hope you're not lost yet. So we come back here, we have shares purchased, we have our total risk, all right, 62 cents per share. We're going to risk a total of 20. And we have the next resistance level right up here. We can look down here and see it's a 7% ROI. It's going to cost me $707. And I've defined my reward and I have defined my risk just by placing in my entries, my stop, and the next support. And those come from being able to identify support levels, resistance levels, and where the current market price is. Now, just to explain how this Excel calculator works a little more, you'll see this yes, and this no, and this 0. These are logical formulas, and this asks, is my stop loss okay? And that, again, is my stop loss, 3.5% or less than my entry price? Yes. If it's not, this will say no. And this one has also changed because my risk to reward setup has also changed now. So let's change this back to 2130. Is this next resistance support okay? What that is asking me is this target 2350, again, not pulling these out of the air, and we're not fudging them to make these things both say yes. We just look at the chart and we write it in. Is the next support or resistance level higher than B18? If you look at B18, that's 2. So does this represent at least a 2 risk? Yes. As a matter of fact, 2350 is higher than 2.5. So if I were to change this and I, instead of wanting a 1 to 2 risk ratio, I want a 1 to 2.5, now it uses, is it higher than 2.5 risk? If my trade strategy was, I only want things that are higher than a 1 to 3 risk ratio, we'll use 20 here. No. And this basically says your risk, 0.62, is not a 1 to 3 ratio with your reward. So if your max profit is $50 and you're risking 20, this would probably need to be over 60 in order to risk $1 to make 3, These are a little harder to find, so some people prefer to use 2.5. And that's kind of how that works. So you fill in your numbers, again, by being able to identify support and resistance levels. And it'll say, is your stop loss okay? Yes. Is your resistance and support okay? Yes. You've defined your max risk for this trade. You've defined your profit. And you have your ROI, you have your purchase price. So this helps you be able to visualize a trade scenario instead of just putting all your money in, setting no stop losses. You wake up one day and you're down $5,000. Well, if you don't want to be down on a position, more than $100, I could buy 161 shares and set a stop here, and my total risk is only going to be $100, right? My max profit now has obviously gone up, but that is based on your risk unit. If I only wanted to lose $10 on this trade, I would only buy 16 shares. Now I can only, I'm going to make $25. Down here, we have a short calculator. It's basically the inverse of the one above it. Let's say I shorted at 1,000, short Tesla at 1,000. These numbers I am making up just to show you. And I set a stop at 1025. And I only want to risk $100. It's going to tell me to short 4 shares at $25 risk per share. And let's say my next, this is calculating in 0, so it's saying my next support level is okay. Let's calculate this in as 990. No, don't short it to 990. Why? Because you're risking $10 from 1,000 to 990. You're risking $25 from 1,000 to 1025 to only make $10 per share, or $40 total. So let's say we short this to 900. All right, it likes that a lot more. Now we're risking $100 in order to potentially make $400. So if you've seen this trade set up 3 times and you've taken it 3 times and you've lost on it every single time, but you take it a 4th time and it works, now you've made all your money back and you've broken even. So you only have to be correct, in this scenario, a little more than 25% of the time in order to make money. The last part of this calculator is a trade journal. And this is important for helping you become more consistent. So if you're taking, bad trades right in here, if you're going, all right, well, I'm going to try and buy here and I'm going to set, one risk and I want to try and get out right up here. If the price going this way and you enter right here, the majority of the time you're just going to get trucked. And you can say, well, I only need to be right 33% of the time to break even. That's correct, but you want to be trying to do this on quality trade setups. If you're forcing trade setups that just aren't there, there's no support, there's no resistance, you're not far off from gambling. You're doing a little better with having risk management, but if you look at this and go, well, this is my 1-to-3 ratio, and then you plug those back in over here into this, and all right, it says that's fine, you're forgetting the part where the price movement is headed one way. This would be probably a better option for a short, but if you tried to force a long position in here, you could say I only got to be right 33% of the time, but you're probably not going to be right more than that. You'll probably lose on this the majority of the time. So you need to be able to identify quality setups when you see them. So down here, I would say this is a more quality setup. We have a defined support level. We have a moderately defined exit level, and we have our entry level. This has appeared right here, and I'm not forcing it. I'm just merely identifying these levels and plotting them in to this. What you do is you go to the trade journal, you type in the reason why you took the trade, and you type in the result. So if you come back to the chart and you say, okay, well, I started a long position while it was in a steady downtrend. Now in the future, let's not start long positions or short positions during the opposite price trend. So just to recap, once you get good at identifying support and resistance levels, you can begin to implement those along with proper risk management into your trade to help you become a more successful trader. If you find you're always setting 5% stop losses and they always hit, you're probably not identifying good trade setups, right? You're probably buying around in some region here or here, and you're just kind of putting it out there. Well, I don't want to lose more than this. Okay, if you buy during the wrong price trend, you majority of the time are going to get your stop losses just trucked. If you buy near signs of a reversal, that's going to work out a lot better for you. Take this information, plug it into the calculator. All right, you can change if you want your stop loss to be within, if it's 2% of the price of the stock, if you want it to be within 3.5%, whatever fits your strategy. Same thing with the resistance. This currently uses B10 is B10 greater than B20. So this is asking, is your exit greater than a 3 risk reward ratio down here? No, it is not for this one, right? And 1 to 3 can be kind of hard to find. Anything higher, 1 to 5, 1 to 4, so on. You find them occasionally. But a 1 to 2.5 is generally good enough, okay? So I'll come back up here and I'll edit this formula. And I'll change this to B19. So this represents a 1 to 2.5 risk reward ratio. My stop loss is within 3.5% of my initial cost of the stock, and I can see my max profit, my max risk. And you want to take detailed notes over here in the journal to help you follow along and know, why did a trade go with me, why did a trade go against me, how can I learn from this and improve to be more successful and consistent in the future. That is all I have for you today. Hopefully after watching this, you will be able to use support and resistance levels and proper risk management to help you become a more successful and consistent trader. I'll post a link somewhere in the description where you can download this Excel sheet so you can have your own copy of it. If you have any questions, comments, or feedback, feel free to drop them in the comments section. And if you like these videos, help me out and subscribe. All right. Have a good day.